We're still under transaction cycle approach to audit, but now we will be moving to another cycle. And we are now discussing your expenditure cycle. So during the introduction for a transaction cycle approach to audit, we said that your expenditure cycle is also known as your P2P. So why is it P2P? It is purchase to pay. Right? So your expenditure is the purchase, while your disbursement is the pay. So it's still the same. We need to look into the different departments, their activities, and the different documents within the departments. And we look into the controls in place. So we have test of controls or substantive tests for two items again. That is first your expenditure, and then another is for your disbursement. Same on your substantive test for expenditure and for your disbursement. So let's start. First, expenditure cycle. Same, we start with the objective of your expenditure cycle. So what is the objective of your expenditure cycle? First, again, proper evaluation, and then provide assurance that resources paid to a supplier represents payment to goods of services received by the entity. So this represents the two main activities. Resources paid to a supplier represents payment of goods or services. So first, valuation. So since this is expenditure, it could be expenditure that is part of your cost of goods sold or part of your operating expenses. If that is part of your cost of goods sold, we have your purchases, we have your purchase returns, allowances, and discount. At the same time, when we say cost of goods sold, we have an ending amount for your inventory. Next, for your OPEX, these are your different operating expenses. And when we say expenses, this can be on credit, so we have accounts payable, or paid through cash, so we have cash. That's why the accounts affected are the items of your cost of goods sold, that is your purchases, returns, allowances, and discount, and inventory, the items of your operating expenses, accounts payable, and your cash. And take note, for your payable, it could be other trade payable, so it could be your notes payable. And now, what are the records affected? The records affected are, since we have purchase, we have your purchase journal. And since we have your payable, we have your AP ledger. And for cash payment, we have your cash disbursement journal. So we have purchase journal, cash disbursement journal, and for AP, we have AP master file and AP ledger. Now, what are the functions within expenditure cycle? So we have two functions, two main functions. First, the acquisition or the expenditure. So resource acquired from vendors in exchange for obligation to pay. So this is the expenditure. And then ultimately, the disbursement, entity pays cash through vendors. So those are the two main functions within the expenditure cycle. Now, let's look into the departments involved and their possible control. So first, requesting department. So the requesting department will prepare now requisition slip. So what is this requisition slip? When we say requisition slip, these are the items requested by your requesting department. So this is composed of the different items that they want the purchasing department to purchase. So requisition slip. Next, we have your purchasing, or also known as your procurement department. For purchasing or procurement department, this is to meet the specific needs of the requesting department at least possible cost. So what they want is that whenever they purchase, whatever is requested by the requesting department, they want to purchase it at the lowest possible cost. So what are the activities then? First, they will receive the approved requisition slip. So from the requesting department, so let's say it is the accounting department who requests, okay? So it is the accounting department who requests. The accounting department will now prepare the requisition slip and will forward that to your purchasing or procurement department. Now, since it is now forwarded to your purchasing or procurement department, the purchasing or procurement department will need now to look into or purchase for what is requested at the least possible cost. That's why they will now locate and negotiate with the different vendors. Now, once they located and negotiated with the vendor with the least possible cost, they will now prepare the purchase order and they will send this out to the vendor, to the user, to the receiving, and to the accounts payable department. Okay? So they will prepare a purchase order. They will give that to the vendor. Next, to the user or to the requesting department, to the receiving department, and then lastly, to the AP department. So, therefore, the PO is prepared in quadruplicate copy. Quadruplicate because it will be given to four individuals. Next, the purchasing or the procurement department will monitor now the purchase order status and updates the requesting party. So when we say purchasing department, it is the if earlier we discussed the sales department, the purchasing department ngayon naman ay yun ang kabaliktaran ng sales. Kung kanina, di ba sa sales, magsisimula siya sa PO from the customer. Ito ngayon, we're talking about the customer. So we are the one now who's preparing for the PO. So once we have the PO, the purchasing or procurement should always monitor the PO and will update the requesting department. Now let's look into the controls in place. First, they have the exclusive function to communicate to the vendors. They alone have the task to look into the vendor with the least possible cost. They will now maintain a list of accredited vendors. And then they will also monitor and compare price per vendor. Why? Because their main objective is to purchase the good or service at the least possible cost. Now let's go to your receiving department. Your receiving department has the function to provide reasonable assurance that what is received are based on the PO. Because again, they will be given the PO, right? And once they receive the goods, they will compare whether the goods received is the same with the PO. So what are the activities then that are done in the receiving department? First, they will file the purchase order until goods are received. And once it is received, they will now count and check the goods condition. So let's say in the PO, place there 3 reams of bond paper, 2 ball pen. Okay. Now, if they will receive it, they should receive the 3 reams and 2 ball pen. And they will check whether the 3 reams and 2 ball pen is at the proper condition. Because if ever it is not in the proper condition, they must return it. At the same time, they also need to compare the PO and the shipping document. So let's say the shipping document says that they provided only 2 reams and 2 ball pen. Now, when you receive that, it should be equal to what has been shipped. That is 2 rims and 2 ball pen. Next, you prepare receiving report to be forwarded to the purchasing and AP. Okay. So now, the receiving department must prepare a receiving report. And this receiving report will be forwarded to the purchasing department and to the AP department. Why to the purchasing department? To update them that the goods are already received. And the AP department to update them regarding the possible liability out of that purchase. So what are the controls in place? The first control in place, or the only control in place, is that proper procedures to ensure that the receiving department will count and check the goods received. Again, the main activity of your receiving department is to receive, count, and check the goods condition. And how do they do that? They compare the PO with the shipping document and the goods that was received. Next department, your accounts payable department. The use of your accounts payable department is to provide reasonable assurance that the payments will be made for shipments received. So then, once the receiving department receives the goods, receiving department, they will now receive the goods. This receiving department will now provide that uh, info to your accounts payable department. So the receiving report will be given to your accounts payable department. Okay. So what are the activities in place in your accounts payable department therefore? So the accounts payable department will check and review the PR or the receiving report and the purchase order, the PR, the purchase requisition, the purchase order, the receiving report, and the vendor's invoice. At the same time, the accounts payable will now prepare the AP voucher with complete attachments. What are the attachments? That is the requisition file. Aside from the requisition file, the purchase order, the receiving report, and the invoice. And then the accounts payable will also prepare a daily summary to be forwarded to the treasury and general accounting. So what are the controls in place? AP vouchers should be supported by complete attachments such as your PR, PO, and receiving documents or receiving report and vendor's invoice. Now, we go to the last department, the treasury department. So the treasury department will review the different accounts payable vouchers. And based on the AP vouchers and its attachment, they will now prepare a check voucher. Why? Because the Treasury Department is in charge on the payment of the goods. So from the AP vouchers with complete attachment, they will now prepare your check voucher and they will now submit it for signing. Next, they will forward the checks and remittance advice to the vendors once it is signed. And then lastly, they will again prepare a daily summary. Take note, they will only prepare the check voucher, but the signing will be different. So it could be the treasury officer. It could also be the CFO, financial officer, etc. So kung sino man yung may authority to sign the check, sa kanya ipapasign. But the preparation of check voucher is only the treasury. Now, what are the controls in place? So check voucher must be stamped paid, cancelled, and check number must be stated. Once it is paid, you place the check number. If it's cancelled, you just place their cancelled. Next, signatories should have assigned limit and or co-signatories. If you still remember, one part of your internal control is we have a different transaction limits. So we look whether the one assigned it is within its transaction limit, or if ever it must be co-signed with another person or individual. At the same time, no checks should be issued with cash pay. Why is it that there should be no check with cash pay? Because if that is cash pay, it could be easily in cash. Whereas if ever it is named towards the vendor, so for example, your vendor is ABC company, it should be named to ABC company because it is only the ABC company who could encash the check. Unlike if ever that is cash, anyone could encash the check. So another controller is you place the name of your vendor or your payee because you don't want that your check can be encashed by any person. So since we're done with the different departments, let's look now into the different documents that is initiated and processed by this particular transaction cycle. So first one, requisition slip. So requisition slip, we said earlier, that is your purchase request, right? That lists down the different items that a particular department wants the purchasing department to purchase. Therefore, it contains the details of the request of a particular department. It is initiated by the requesting department, and we said it will be given to the purchasing. Next, we have your purchase order. This describes the goods to be acquired, and to the vendor you want it to be acquired. And we said we need to determine the vendor with the least possible cost. It is initiated by the purchasing department and prepared in quadruplicate copy, vendor, user, receiving department, and AR. Next, we have your shipping document. Your shipping document describes the goods to be shipped. It serves as the contract between the seller and the courier. It is initiated, of course, by the vendor because it is the vendor who ships the goods, and then it will be received by the receiving department. So it is the receiving department of the purchaser, or it is our receiving department. And then the receiving department will prepare a receiving report. And the receiving report, as we said, describes the goods to be received. So that is initiated by the receiving department, and it is given to uh, two departments. That is your purchasing department. We said why? To update the purchasing that the goods are already received, and also accounts payable to update our records relating to the goods received. Next, we have your vendor's invoices. It describes the goods purchased. Again, it comes from your vendor, and it will be given to your accounts payable. For the accounts payable, we said it now prepares the accounts payable voucher together with the different attachments, which includes the purchase requisition, purchase order, the receiving report, and the vendor's invoice. Next form, we have your remittance advice. And what is your remittance advice? This is given only if we are already paying for the goods or services we have purchased. So this informs sellers that their invoice has been paid. It is normally initiated by the treasury, and it is given, of course, to our vendor. But take note, the treasury will only prepare the check, but another individual will sign the check. Next, daily summaries. It is a summary of daily transactions of all the departments. It is initiated by the AP and the treasury. It is given to general accounting. So for the AP, it prepares a daily summary of the total accounts payable, while for the treasury department, it prepares for the daily summary of the total payment. Okay, AP, this is the total AP. Treasury, this talks about the total payment made. And this will be given all to the general accounting. Now, since we're done with the different departments, the activities within the department, and the different documents, now let's go to the TOC. Let's start first with the TOC of purchase. For the TOC of purchase, our first assertion is your existence or occurrence. Again, for existence or occurrence, this talks whether the purchase really were acquired. Okay, so whatever is the recorded acquisitions or purchase are the items acquired. So what are the controls in place? First, acquisitions approved by authorized personnel as evidenced by signature on PO. If you still remember, from purchase requisition, this will go to your purchasing department, and the purchasing department must prepare a PO. Therefore, to check whether it was properly approved by the purchasing department by preparing the PO, you just need to examine the approval signature. And when we say examine, sorry, you inspect. Again, we are testing control, so iikot lang uli yan sa IOI at rep performance. Another assertion, another control under this assertion is the preparation voucher for the purchase of goods. So for this voucher, we call this one your AP voucher file. And under your AP voucher file, we said you attach there your PR, your purchase requisition, your PO, your purchase order, your RR, your receiving report, and then lastly, the invoice coming from the vendor. So how do you test the control? Whether it is properly prepared. First, you observe the whole procedure in the preparation of your AP voucher or your purchase voucher, and you examine the files documents. What file documents again will you examine? The different attachments on your AP voucher, PR, PO, RR, and invoice. Now, what if the vouchers are not prepared? It is purely the file documents. So if ever the vouchers are not prepared, you are now to review the entries in the purchase journal. And based on the entries, you compare it to the documents. Ito kasi, di ba? May voucher, you compare it to your documents. Now, what if walang voucher? Sabi dyan, i-check mo na lang yung records. And from the records, you inspect it to your different documents. Next control, check supporting documents and cancel documents. So this talks about the cancellation of your purchases. If in case it was not really purchased, then you just examine the cancellation on documents. Again, we said, how do we examine? It must be stopped. There must be a canceled stamp on your document. Next, assertion, completeness. So when we say completeness assertion, all acquisitions that occurred are recorded. So first, control, pre-numbered receiving reports are used and accounted to determine that a liability is recorded. As you all know, our receiving reports must be properly pre-numbered. And based on this one, we account on the total numbers of receiving report, and this must correspond to the liability we recorded. So for example, you started for this month with receiving report 721. You ended with receiving report 777. So in comparison from 721 to 777, there must be a liability that is recorded among those receiving reports. So how do you test that control? Again, you observe the procedure and account for the sequence of receiving report. It must be properly sequenced based on the pre-numbering. So 721 until 777. Next assertion, rights and obligations. That recorded acquisitions are the entities, purchases, and liabilities. So what are the controls in place? First, receiving reports are prepared by persons who have access to a blind copy of PO details. So what is a blind copy? So when we say blind copy, normally your PO is only sent to the four departments, right? Okay. So when we say blind copy, it is like your CC in your email. So you will just furnish them with a copy of that PO without the necessary details on that PO. So you're just furnishing them for possibly for filing only. So how do we test this control? You observe that the procedure is performed. So when we say blind copy, again, earlier we said, normally we don't have the enough attachments on it. So if you still remember, the PO is also sent, your PO is also sent to your receiving. And since the receiving has the PO, they will now compare that to the blind copy of the PO. Sir, why only blind copy? Because the details necessitating the PO is only known by the purchasing department based on the purchase requisition file. So it's purely a blind copy. So how do we test that? Again, observe whether the procedure is performed. Next TOC for purchase transactions, valuation and allocation. This talks about the amounts prepared or presented in our records and financial statements. So first, invoice amounts are verified by reference to PO and receiving report. And also, mathematical accuracy is also checked. So here, we check your invoice from, if you still remember, the AP will prepare now a voucher with the complete attachments. So we check the PR, the PO, the receiving report, and the vendor invoice. And we check for the mathematical accuracy of that. So how do we test that control? Again, you examine the voucher for signature indicating the performance. What voucher are we talking here? It is the AP voucher because it is the AP voucher who has the documents over the PR, the PO, the receiving report, and the vendor invoice. Next assertion, P&D, that all acquisitions are recorded in accordance with the PFRSs. So what are the controls in place? The employees are required to use a chart of accounts, and there is an account coding. So how do you test the control? Again, examine the chart of accounts. So whenever we say examine, this talks about inspection. This talks about inspection. And also, there must be a signature of employee who performs that verification. And since we're finished with the TOC of your purchase, we go now to your substantive test of purchase. So first assertion, existence or occurrence, audit objective, to determine that recorded purchases are items that were acquired. So what are your audit procedures? First, we examine underlying documents for authenticity. So we want that our purchase really existed or occurred. So what documents do we need to examine? These are your PR, PO, receiving report, and your invoice. Next, you scan voucher register for large or unusual items. Okay, so if ever you are looking into large or unusual items, this is more about targeted testing. So what's the difference between targeted and your sample or directional testing? So whenever we say you are testing based on the sample, it must be common within the population. Now, if that is an outlier, we remove it out of the population and we target it. Okay, so for example, your normal purchase is from 1 peso up to 300,000. That's the normal purchase. However, suddenly, there's a purchase of 1.5 and 3 million. So this 1.5 and 3 million is considered as an outlier on your purchases. So you remove them out of your population and you will target them on testing. So what's the difference? If that is target testing, whatever is the result applies only on the targeted testing. So the result of this test applies only to 1.5. The result of this test applies only to 1.5. If that is sampling, the result of this test in that population applies to the whole population. Again, if you are sampling, whatever is the result of your test on the sample, if this is the sample within 1 to 300K, applies to the whole population. But if that is targeted testing, whatever is the result of the target testing applies only to the item targeted for testing. So if you tested 1.5, apply only that. 3 million, apply only that. Okay? So for large unusual items, normally, we do targeted testing. Next, we inspect asset once we inspect asset that was acquired. So for example, you recorded that 1.5 million based on the source document. You see whether the asset relating to that 1.5 million is really existing on the entity. So let's say the 1.5 million relates to a property, plant, and equipment, then that equipment must be within the entity. Next, we trace inventory purchase to perpetual records if that is inventory itself. And then lastly, we scan voucher register for duplicate payments. What voucher register is now check here? We are looking into your check voucher. Here, we are looking into your AP voucher. Okay, next, completeness. To determine the purchases that occurred are recorded. So what are our audit procedures? You trace the sequence of the receiving reports to entries on the voucher register. If you still remember, we said earlier, when we are testing the control over your vouchers, we said that your vouchers or your receiving reports must be pre-numbered. And the vouchers also are pre-numbered depending on the voucher register. So here, we just again trace the sequence of your receiving reports to your voucher register. So we look whether all receiving reports are entered in our AP voucher file. At the same time, we want to test the cutoff. When we say test the cutoff, if it applies to January only or the month of January, it should be recorded on the month of January. If it applies to the month of February, then it must be recorded on the month of February. Next, we account for the sequence of entries in the voucher register. So here, we look into now the entries in the voucher. We said that the vouchers must be pre-numbered. And when we say the vouchers are pre-numbered as to your entries, then we should follow the numbering on those vouchers. Next, rights and obligations. To determine that purchases are the entity's acquisitions and liabilities. So we check based on our invoices whether it was already entered into our records. So we look into the vendor's invoices if it is already entered into our records, and at the same time, we examine the different vendors' invoices. Another assertion, valuation or allocation. The audit objective here is to determine that purchases are recorded for proper amounts. So the main audit procedure, since we're talking about valuation or allocation, then we can recompute invoices or we can put the invoices and compare it to the purchase order. So if in the purchase order, it should be placed 100, then on the invoice, it should be 102. Lastly, presentation. This talks about presentation and disclosure in accordance with the PFRSs. So what would be our audit procedure? You check the accuracy of accounts on invoices by reference to chart of accounts. If you still remember, the TOC here is that there must be a proper chart of accounts and account coding. So to check that through substantive tests, you look only on the accuracy of accounts based on the chart of accounts. And since we're done with the TOC of your purchase transactions, then we go now to your TOC of cash disbursements. So TOC of cash disbursement, since we're done with TOC and substantive tests of purchase transactions, we go now to the TOC and substantive test of your disbursement. Let's start first with the TOC of cash disbursement. So first assertion, existence or recurrence, that the recorded cash disbursement occurred. So what are the controls in place? Authorized individual signs and mails promptly the check. We said the signing is different from the mailing. The preparation, signing, and mailing should be different. Why? We want to segregate the duties. So how do you test the control? You test the control by inquiry or observation. Next, a person independent to handling of disbursement reviews whether checks are processed on a timely basis. So this is now on your accounting department. So they will check now whether the checks are processed on a timely basis. So how do we test the control? Again, you either inquire whether there is a procedure and the procedure is followed, and you examine the outstanding check. So normally, this happens in the accounting department for bank reconciliation. Because once we issue check, we see if ever the check is already reflected in the bank statement. That's why we see whether it is processed on a timely basis. So here, it is more inquiry and inspection. Next assertion, completeness. All cash disbursements made are recorded. So first control, checks are pre-numbered and accounted for depending on who prepared the check. And of course, checks are pre-numbered. How do we test this control? Again, observation. Whether employee who prepares the check register accounts for the sequence of the check. Next, control. Preparation of bank reconciliation independent of cash disbursement and cash receipt. Earlier, we have already discussed this in the previous assertion when we discussed the assertion of existence or occurrence. So how do we test that control? Again, observation and inspection. Again, we want to have a segregation of duties from the preparation, signing, mailing, up to the checking on your bank reconciliation. Next assertion, rights and obligation. All cash disbursements are made for obligations of the entity. And what are the controls in place? You examine the supporting documents before the check signer, who is independent of voucher preparation, who signs the check. So again, you compare the different source documents based on the AP voucher. So we have your AP voucher, right? On your AP voucher, you prepare now a check voucher. So what are the documents under your AP voucher? We have your purchase requisition, purchase order, receiving report, and your invoice. And now in your check voucher, someone will prepare, another one will sign, and another one will mail. So how do we test that control? We test that control by inquiry on the segregation of duties from the preparation, signing, mailing, up to the segregation of the different items which consists now your AP voucher file. Next, you observe the segregation of duties. And then lastly, again, you inquire about the check signer's procedure for reviewing documents. So how does the check signer signs? Does it purely sign the check, or you will look again on your AP voucher and then check whether based on the AP voucher amount, it is equal to the check voucher prepared and the check prepared. Next, TOC of our cash disbursement, valuation or allocation. This talks about the amounts recorded. So what are the controls in place? Verify amounts and calculation on your vendor's invoices. And then there's someone who signed the voucher after this procedure. So this is more about your AP voucher. And then ultimately, on your check voucher. So how do you test that control? Again, you observe and you examine the signature on your paid invoices. So how do you determine whether the invoice is paid already? Whenever there is already a check voucher, you record this one on your check register, and then whether the check is already delivered and cleared by the bank. Next assertion, presentation and disclosure. That cash disbursement are recorded in accordance with PFRSS. So what are the controls in place? Again, you look into the chart of accounts and whether there is someone who checked for the coding and on the different numbering on your chart of accounts. So how do we test that control? Again, observation. So still, whenever you are asked on your TOC, please lang, iikot at iikot lang yan sa IOI at performance. Aside from that, wala nang iba. Other term for inspection, examine. And since we're done with the TOC of your cash disbursement, let's proceed now to your substantive test of cash disbursement. So first assertion, existence or occurrence. So for existence or occurrence, we determine that recorded cash disbursements occurred. And what are our audit procedures? You look into the paid checks for appropriate endorsements. So when we say appropriate endorsement, whether it is endorsed by our payee. So halimbawa kung ang payee mo dun ABC, dapat si ABC ang nag-endorse nun. And then we examine documents underlying the payments. So we look into the AP voucher file and the check voucher file. Next, you have your completeness. To determine that all cash disbursement are recorded. So how do we check that? You reconcile cash disbursement per book and cash disbursement per bank. And we have already discussed that earlier when we talk about your TOC. So in your TOC, we said under your existence or occurrence, we said there must be someone who is independent on your disbursement review. So that is as to looking whether the cash disbursement are already recorded per bank. So another test therein is, of course, to test the bank reconciliation. So you do the reconciliation or you test the bank reconciliation. Next, rights and obligations. To determine that all cash disbursement made were the entity's obligation. So still, same audit procedure, examine document underlying payments. Therefore, the examination of documents underlying payments applies to both existence and occurrence, at the same time, price and obligation. So what are the documents underlying payments? AP voucher, check voucher, and under AP voucher, do not forget, we have your purchase requisition, purchase order, receiving report, and then lastly, your invoice. Next, valuation or allocation to determine that purchases are recorded for proper amounts. And what will be your audit procedure? Purely recalculation, whether the amount is proper. Lastly, presentation and disclosure, whether the purchases are presented and disclosed. So what will be your audit procedure? You check the accuracy of accounts on invoices. Okay, and the same for your expenditure is still the same. We look into the different departments. We look into the different activities on those departments, the forms. We discuss the different controls in place. At the same time, we can do tests of controls on this, whether tests of controls on your purchase, next, test and controls on your cash disbursement, and then substantive tests on your purchase and substantive tests on your cash disbursement. That's it for your expenditure and disbursement cycle.